You are joining us for our Q&A jam session, and the question is, what score should you be counting on to not be at risk? I think mid-70s. I think you're going to make your mark. I'd be surprised if you don't. Higher the better, obviously. I get nervous when people get too high score because then I wonder if they're memorized questions and answers and not understanding concepts. But there are some people driving nuts who want people to get like a 90, 95 before they go down there and test. And it's pass fail. You don't need to, you're not going to get a score. There's no A, B, C, D. It's pass fail. Let me go grab the Kaplan Q Bank, Charlotte, and I'll bring that question up. Let's see, Kaplan Q Bank. If you don't have a Kaplan Q Bank, I highly recommend it. We're giving you that commercial with my Guru 15 discount code at checkout. You can get the Series 7 Kaplan Q Bank for $55.80, 3,600 questions with a performance tracker. It's a best in class, yeah, for sure. So for that commercial, Kaplan allows me to give you a free look at Kaplan content. All right, let me go find you guys again. There you are. Charlotte, can you see my Kaplan Q Bank?
Yeah, I can see your screen.
Okay, let's put in this question. Well, if I tell you annuities aren't heavily tested, then you're going to tell me you got 125 of them. I won't believe you. But it is what it is. Definitely, I think of a variable annuity. That's the heavily tested one. And I think of that as a variable annuity is a mutual fund with an insurance wrapper. Chris, Brian is spot on. There's nobody more spot on the actual exam versus their content than my brother from another brother, Brian. If you don't have that cheat sheet, Brian has offered it for free. And so, I don't know if he'll honor that anymore, but at Brian at testgeekexamprep.com, you might see, hey, are you still offering a copy of the cheat sheet for free? I give him grief because I wish he wouldn't call it a cheat sheet because I'm always afraid somebody's going to be at the exam with that thing and accidentally, have it in their purse or whatever. And then they find it says cheat sheet, So I've been trying to get him to go like data dump or something like that. 1558227. A customer buys 10,000 worth of new issue municipal bonds at a price of 104. Wow. So if this was a competitive underwriting, Charlotte, the syndicate won because they gave the highest price for the bonds. And by doing so, lowered the net interest cost to the issuer. We'll see. The bonds have 10 years to maturity. So you're going to have to adjust your cost base each year. We don't want you taking that loss whenever it's convenient to you. The IRS thinks if you have muni bonds, Charlotte, you have other things, which is correct. Nobody takes their last buck and buys a muni bond. When I was a baby broker, Charlotte, cold calling, and you told me you had muni bonds, I go, oh, cool, you're rich. Just the kind of person I'm looking for, right? And so they have other things besides muni bonds. So we're going to lose $40 over 10 years. So that's going to be $4 a year. I'm going to adjust. I do things per bond or per share. And then when I'm all done, just, do that. So 4 years after purchasing the bond, sells them at 99. Okay, so all we have to do is adjust our cost base. So I'm going to take my $40 loss, divide by 10 years. I should be decreasing. I call it decretion, Charlotte. That's not a test term. I just think of straight line amortization upward as accretion, and I think of straight line amortization downward as decretion. Just me, right? But I'm going to go down here, so that's $4 a year. So I've had it for 4 years times 4. So I should have adjusted each of these bonds by $16. You see, I got that. So 4 times, the 4 years. So 1,040 minus 16. My cost basis, my adjusted cost basis is 1,024. You see how I got that? I took the 40. I'll show it to you in just a minute. And then I sold it for $990. So I lost $34 on 10 bonds. That is choice A. Let me just show you what I did here is I took the math. And here we paid 1,040. And you have to recognize that this is a bonded premium. Assuming we held it to maturity, we'd get back 1,000. So we're losing $40 of life. I don't get to realize the loss, but it's convenient for me. I have to do that, whatever, each year. The point of making me do this each year is that won't shelter as much income from elsewhere, which is the point. By making me take a little bitty hits along the way. And that means I have no gain or loss at maturity. So $4 a year times the 4 years. Well, let me put this in a smaller font. Boom. And then that $4 times 4 years is 16. It's the adjustment in my cost base. A lot of work for one point, but it's practical application. The good news about practical application is there's no interpretation about a right answer. You simply get it right or you don't. Now, listen, I'm arithmetically challenged. So if somebody offers me a calculator, I say, thank you very much. And so, so 1,040 minus 16. My adjusted cost base is 1,024. I sold it for $990. So that's my cost basis. This is my sales proceeds. And the difference between those is a $34 loss. And that is on 10 minutes. Any question on that? Let's see what Kaplan's rationale is. Yeah, I this is just a buffet. Take what you like, leave what you don't. I don't like using 10,000 and then 400. I like to do whether it's stocks or bonds. I always like to do it one at a time. And then when I'm all done, just say, okay, how many am I talking about? That way I only have to do the multiplication once rather than continue to multiply through the question. And knowing that I'm arithmetically challenged, I always like to try and make it as easy as possible for me on the math, right? All right, so let's see what else we got going on. Our annuities heavily tested. So Elvia, I'll just tell you what the test questions are. So on variable annuities, it's sometimes referred to as a non-qualified retirement plan. And what we mean by non-qualified is you're not getting it through your employer. You're using after-tax money. You as an individual have after you've maxed out all your other things, IRAs, 401ks. If you've maxed out every other type of retirement plan and vehicle available to you, and you still want to save, perhaps a variable annuity is appropriate.
Thank you so much.
So you say, Dean, I have $100,000 to invest in a variable annuity. Very important. That's your cost basis. Cost basis is simply when you turn the money into the investment. Now, Via, you're 59 and a half, and there's $1 million in there. And I say, okay, so what do you want to do with this $1 million? You're 59 and a half, so there's no 10% penalty to have access to these funds. I should warn you, though, there's no way to turn a retirement plan distribution into a capital gain. Everything's coming out is going to be ordinary income tax rates. And you already pay taxes on 100. So if I send you a lump sum distribution, the entire $1 million, you owe ordinary income tax rates on $900,000. Let me get rid of this. Let me get a whiteboard for us. By the way, this is test 165 and, sixes and everything. So she invested $100,000. And we said that represents her cost basis. We said cost basis is simply when you turn the money into the investment. And the reason that's important is that's money she's already paid taxes on. Boom. Let's label that. And boom, we said that she's now 59 and a half. We put that into a separate account, a mutual fund. That's what I meant by the insurance wrapper. It's going into a separate account, which is a mutual fund. And we said she's now 59 and a half, and she has $1 million.
And we said there's various choices now about getting that $1 million. One we could do is a lump sum distribution. I just told you she's going to owe taxes on $900,000. She says, well, Dana, that's I don't want to do that. I don't need $100,000. Just send me the 100 I originally put in there. I go, yeah, I hope I'm pronouncing that correctly. No can do. It is test question LIFO. Last money's in, our first money's out. So whenever you're struggling with a tax question, it always goes with what yields the most to the U.S. Treasury. Right. So if I send you 100, it's 100 of the 900 you haven't paid taxes on. If I send her another 100, it's 100 of the 900 she hasn't paid taxes on. Right. She goes, oof. Yeah, it is what it is. Now, another thing you could do is you could annuitize this and turn it into an income stream. Pretty cool. An income stream that you can't outlive. Wow, that's pretty cool. I say if we annuitize with life only, that will give you the largest monthly check. That's a test question. You'll give her the largest check. And I say, we're going to turn your accumulation units, that's what those shares in that separate account are called, into annuity units. Just an accounting metric. And we're going to send you those monthly checks. Now, your monthly check is going to go up or down based on the assumed interest rate. I joke, we won't be an insurance company long if we can't assume interest rates or returns that we can get. So, I said, when you get your first check, give me a call. She says, hey, Dean, I got my first check of $1,000. I go, great. Now, remember, of the $1,000, 10% of that's your own money coming back to you. That was money you paid taxes on originally. That's called your exclusion ratio. So you owe taxes on $900 at ordinary income tax rates. She goes, well, why'd you want me to call you? I said, because your check from here is going up or down based on the air. You told me your first check is 1,000. So next month, you're either going to get 1,000 plus or 1,000 minus or 1,000 based on the air. We're going to take you all over the place, but up or down the value of an annuity unit. So call me when you get your second check. She goes, I got my second check, 1,010. Woohoo. I said, well, that means we did better than the air. She says, how much? I said, it doesn't matter. It doesn't matter if it's 4.1 or 30%. Doesn't matter. If the check goes up, it's just because we beat whatever the air was. I said, call me when you get your third check. She goes, you really want to talk to me every month? I say, yeah, I like to talk to everybody every month till the check goes down. Because that's when I think people understand it. She gets her third check, she gets the same amount. That means she got the air. She gets her fourth check, it's 1,000, would drop $10. We got less than air. By the way, it doesn't matter if it's 3%, 3% is still positive performance. Insurance companies are the master of large numbers. So this will all work out in the wash. So there's a nice overview of variable annuities, quick and dirty, so to speak. You can put annuities in my search bar and you will get all kinds of content on variable annuities, lectures, replays. So please use the search bar. There's lots of content available.
Thank you. And I wanted to take a moment to really thank you for the Kaplan course for my SIE. I passed.
Cool. Are you going to join me for the 7-2, I hope?
Yes.
Oh, very great. If
Oh,
you join me for all 3 of my classes and you get what I call the registration test taking hat trick with me, hey,
okay.
wonderful. You get it on your own. However you get it, get it. But if you join me, I give you a nice little tombstone that has your dates when you attended your Kaplan class with me and your victorious test dates, something you put on your desk. Now I've been thinking you guys would be a good beta. YouTube wants me to sell things all the time. They're all on me about selling channel memberships or coffee cups or t-shirts. And, it doesn't speak to me at any level. But I have thought about putting that and making that available for people where you could, buy yourself a little plaque, a little tombstone. I think FINRA could make like millions if they just did when you pass your test said, would you like a little plaque or tombstone for $40?
I saved my paper. I was so happy and excited.
Yeah, you think you
I
get
saved
something to commemorate your testing victory instead of a stupid piece of paper. Uh, Eric, best way to keep IA and BD's rules requirements. Well, I call it the playbill, right? When you go to a play, I always love it when they give me a playbill. And sometimes it has a cast of characters
Okay.
And, sometimes those transactions take a long time. I say, man, the sales cycle in banking can be incredibly long, So, but
I can
anyways,
imagine.
yeah, so investment advisory fee are fees. Now, once you get that cast member correct, then the next thing you do is say, okay, let me finish reading the question. Is it about an agent of the broker dealer? Once you determine it's a broker dealer, it's either the question about the broker dealer or the agent of the broker dealer. But now you're kind of, you hit the trigger that sends you down the BD kind of thing. If it says investment advisor, then you got to be a little more careful because now you
Okay.
got to determine whether it's federally covered or state. Before
Right.
you move any further, right? Because now you say, okay, what is it? Is it state or federal? And then that
Okay.
what follows. The reason that's really important is now you got to read the rest of the question. Is it about the firm or is it about the investment advisor rep? Now you have to be
Okay.
careful again because the rep will have different answers based on what kind of firm they work for, right? So that's how I would do
Okay.
it. I'd say, okay, just let me make sure I'm clear about what they're asking me. All right, the law.
Yeah,
Yeah, I'm sorry, Aaron.
I remember on the exam there was so many of like if this person does this and they're working for a federal company or a federal broker and they only
There's
have
no such thing.
a
Well, let's slow down. There's no such thing as a federal broker. Broker
okay,
dealers are federal state. They may have to they all register with the SEC in a state, but there's no phraseology about federal broker dealers. Broker dealers are broker dealers that are going to register with SEC, FINRA, and a state, at least one state, because they have to have a home office somewhere,
right?
right? But they're not federally, there's no difference between federal or state broker dealers. They're just broker dealers, right? That's
Maybe it
pretty
was a
simple.
federal broker, a federal investment advisor then.
Well, there we go. Now that matters. So it's
Yeah,
federally covered right now. If it's federally covered, the investment advisor rep only registers in a place where they have a place of business.
place
That's
of business.
period. Full stop. I could have 1,000 customers in a state and not register as long as I don't have a place of business. If it's
So
state,
say, go ahead.
then it becomes either I have an office and or I have de minimis. Right. So that's how it goes from there. Right. I think it's very
Okay.
easy, probably covered, right? The
Okay.
loss of section is Series 65 is the same nearly beyond the 63. Yes, for the most part. Andrea, I have one of my favorite students of a long time. His name is Vince. And Vince joined me for 66, and I'm very rarely surprised, but I was surprised. He missed his mark and he really worked hard, and I thought he knew it. And I said, hey, listen, as a plan B, why don't you just next week go take a 63, 65? You're back in business. And he went for it and he got it. Woo! Now, I don't suggest we try and miss our 66. We should pass the first time.
Yeah.
But if we don't pass, so the reason I told him to do that, Andre, is because there was a lot of overlap to answer your question. I didn't think he was going to encounter something on 63 that was going to blow his mind. Like, oh, I've never seen this before. Right. And then 65, in that case, he had a little more economics, but I knew from his SIE, I thought he'd be okay on that. So there you go. So the answer is yes. The answer is yes.
Okay.
Okay, let's see. Kaplan QID, Monica, is that Series 7? What exam is that? Are you here, Monica? Series 7. Okay,
Yes,
cool.
7.
Okay, let's get the Kaplan Q Bank. Let me get the chat. Is there a section or SPACs? No, but Andrew, SPACs are pretty straightforward. They are testable. SPACs are special purpose acquisition corporations. We raise money blindly. In other words, I don't tell you, Andrea, what we're going to do. We're going to do an IPO, initial public offering. I say we're going to raise $100 million, Andrea, then I'm going to find a business for us. A private business, we're going to verse. Now, here's the test questions. It's dangerous. I mean, it's high risk, high reward. So let's say my SPAC is successful. I raise $100 million. Now I have this cash in an escrow account. And now I go trying to find a private business to buy. And, maybe it's Grand Canyon Brewing. I'm coming to you from Northern Arizona. And that's a microbrewery. And, what I do is issue stock in cash to take that brewery into our SPAC. And now we have a public company called Grand Canyon Brewing from the SPAC. It's hard to value a SPAC when we don't know what we're going to buy. So the test question is the public offering price on a SPAC where we're raising money blindly. Sometimes we refer to these as blank check companies. SPACs are also known as blank checks, blind pools, is $10. That's testable. So the public offering track on SPAC is $10. Now here's the other danger. Dean is sitting on 100 million. If I don't find something to buy in 2 years, I have to get back the money. Now the danger, Andre, do you think Dean wants to get back the 100 million? No, I'm going to be motivated to get something, whether it makes sense or not. Right? So, did you see what's her name, Halle Bieber? Man, these young ladies in the cosmetics business doesn't surprise me because Estee Lauder was one of the first lady billionaires in the cosmetics. The margins must be incredible. But anyways, this cosmetic company bought her out, and I thought that's what we should do, Andre. Get a SPAC, go find some social media young lady, and have her start selling lipstick. By the way, my understanding is that whether it's the Jenner girl or Halle, they're selling lipstick at like $7 a stick to the young ladies, and Estee wants like 25, $30. And eating in their business. But maybe we go to a brewery, a cosmetics company, you get the idea.
So
All right,
on the exam, there were 4 different questions about SPAC.
more. Did I nail 2 of the 4? I hope. Did
I don't know. So this is what was tripping me up. There's one of the questions asks for what is the terminology or the name for a SPAC, and then the options were a controlled merger, a combination, and then 2 other ones. And I thought the answer was one of those 2. But I know that on one of the videos I was watching with you and Brian, you mentioned it as a reverse merger, which wasn't one of the options, so I couldn't pick that one.
a combination because we could we're combining the SPAC with this with this private business.
But there's no section or chapter in the
not really, and not on these one-offs. I mean, you could Google it, I guess. I mean, I don't know how much you.
Yeah, I looked for it. I couldn't find it anywhere. And then it was asking about.
There's been a lot. It's not as tested as it used to be, but just Google it. Shaq did one. I mean, it was really popular, and a lot of people lost a lot of money. But you can just Google SPAC, and some of those horror stories will come up, and maybe you'll find in doing that. I've made a video of this very same question. So Charlotte, this question is in video on my channel. I did it about a week ago, but I'll do it again. So very rarely. Oh, I think the one I did is now I'm just looking. This one's J&J 15. Bastards. Have you done this before? I was looking at this question thinking I had done this question before, and I was about to say 98 days.
That's what I said.
Yeah, but now it looks like a little different. Okay, so let's play. I'll play seller, you play buyer. So I own this corporate bond. It pays on January and July 15th. And you're purchasing the bonds on me on April 17th. And I say, okay, well, listen, you're going to get a check that represents the entire time frame. And these were my bonds part of January. They were my bonds for all of February. They were all my bonds for all of March. And they were my bonds part of April. And you say, Dean, when I get the check, I'll send you your pro rata share. I say, no. The Uniform Practice Code, which standardizes practices within the securities industry, says that buyers pay sellers the dollar amount of the accrued interest. Now, in that first column, the only number that can go in there is a 30 or a 16. When I got paid on the 15th, January 15th, that was for up to but not including January 15th. Very testable. There are 30-day months. We didn't want our high talent men and women to have to remember nursery rhymes and knuckle humps about how many days have September. So corporates and munis use 30-day months.
Mm-hmm.
Governments use actual calendar. So 30 in February, 30 in March. Trade date is when we agree to terms. That is not when ownership changes. Trade date is when you agree to terms. Settlement is T+1, the first business day after the trade date. Saturday and Sunday are not business days.
Mm-hmm.
A business day is any day the New York Stock Exchange is open for business, and they're not open on Saturday and Sunday. These are still my bonds on Saturday. These are still my bonds as the seller on Sunday. These are not going to be your bonds until Monday. At that point, you take possession and you're entitled to all the interest going forward. And so you owe me for up to, but not including settlement. So you owe me for 19 days,
Okay.
April. And if we total that all up, we should come up with 95 days. Now, I have a shortcut for this. If you want to use my shortcut, you would take settlement. What month is April? January, February, March, April. That's the fourth month. And you could take settlement, 420, and you could subtract the last time the bonds paid interest. And this is just a shortcut. This part I can't help you with. 5 from 20 is,
Oh, 15.
and 1 from 4 is,
3.
and then you just got to remember that every month, 3 months has what?
30 days.
There you go. Now, I think, Charlotte, very low probability. Once in a blue moon, somebody tells me they had to calculate accrued interest.
Okay.
Blue moon. But the concept, the recognition of it is very testable. The buyers pay the sellers the 30 days, knowing that some bonds trade flat, test question.
Mm-hmm.
That means no calculation of accrued interest. Zero coupon bonds trade flat. Income adjustment bonds trade flat. Bonds in default trade flat. All right, so let's see. Anything else going on? All right, boom. Is that a new one, Monica? Let's go back. Boom. Let's see, get my chat. Where's the chat? There's the chat. 1545 1545 6768. 15. Oh, I messed up. 15. Put a 3 in there. I don't think there's a 3. 154. Woohoo! A lot of ways to proceed on this. First, we should be able to identify this strategy. This is a straddle with different strike prices called a combination. Straddles with different strike prices are called combinations. And whenever we have the same action, buy, or buy, sell, we're going to combine. So what I'm going to do here is I'm going to make my T. A lot of ways to do it. I use a T to track monies in and out. And so I'm going to do an opening purchase. Important, opening purchase. And I should know the way I get rid of an opening purchase is by doing a closing sale. You know, there's 3 things that can happen to an option contract. A good way to remember the 3 things that can happen to an option contract is T. The contract can be traded, the contract can be exercised, or the contract can expire. So that's how the question is going to end. I like when I have a complicated one, I like to label what I'm looking at. That's a 40 call I'm looking at. And this is a 50 put. As you can see here, I spent a lot of time on the setup. I haven't even looked at the question yet. I'm just doing my setup. You know, the more time you spend setting up the question, the more likely you are to get it right. Now, what I like to do, what Dean likes to do is not testable, but what I like to do is remember my memory aid devices, which is call up, put down, call up, put down. So I close for intrinsic value. So what I like to do is I like to put the market price above or below my strike for my analysis. And remember, call up. If the market price is up from the strike price, the contract has intrinsic value. And by the way, I do things on a per share basis. I think it's a mess to have 600 and 800 and all the zeros again. So I do the point per share and then just how much am I talking about? Okay, so what is the intrinsic value of a 40 call with a stock at 44? 4 points. So on that leg, it doesn't look like we're doing so well. Not testable, those are called legs. And on that leg, I lost 2 points, right? Because again, you know, I'm going overkill here, but you know, we're trying to give you your money's worth. Oh, you didn't pay nothing. I forgot. For this session, I should say. Right? So the way we offset is to do a closing sale. You know, I think, you know, options are kind of like learning a foreign language, right? They say when you dream the foreign language, that's when you know it. You know, what happens with options, lights go on and they go out again and they go out again, you know, and you just got to keep working. All right. And as I told you, what I like to do is put the market price either above or below. Remember this, call up, put down. Call up and put down our memory aid devices about the relationship of the strike price to the market price. So my choice to buy the stock at 40 when it's at 44 is worth 4 points. And my choice to sell at 50 when the stock's at 44 is worth 6 points. Now, I actually think this question is being kind of nice to tell you that it is a loss. You know, I would have given you, if it was me, I would have given you 2 choices with a gain and 2 choices with a loss. But, you know, oh well. And then we just simply net this out. And I think you're going to be unhappy. And you're unhappy because you got more money out than money in. So you lose 4 points on a contract, that's $400. And that is called a combination. A combination is simply a straddle with different strike prices. And the reason you're a loser, by the way, is you didn't have enough volatility to cover your out-of-pocket cost. Right? You're either buying or selling volatility in these strategies, and you bought 14 points of volatility and you only got 10, so you're a loser, right? You needed this to go either above 54, above 54. You got to cover your out-of-pocket from this strike price plus total premium, or you needed it to go below 50 minus 14. What's that, 36? And so you're stuck here because it didn't have enough volatility. All right, let's see what Kaplan says here. Oh my God. You know, Bill James he's the guy who's in charge of this thing at Kaplan, and I'm not a Kaplan employee, but you know, I call myself senior instructor emeritus kind of guy, you know. And anyways, Kaplan does ask me to review materials, and you know, Bill says he's working on the next version. He's the guy who's in charge of this, of the 7. And could he send it to me and he'd pay me to kind of look it over and, you know, check it and stuff. And it was when I see a rationale like that, I feel like calling Bill and say, Bill, come on. Can't you explain that in less than a paragraph? So, I'm pretty sure, let's see, I think it says the same thing I said. Let's take this one step at a time, beginning with the call. Okay. The opening purchase was made for the close. Okay. Okay. Looks like he's basically doing the same thing I did there. All right. If you're watching Bill, my apologies. That's not such a bad rationale after. All right. Anything else? You're starting Unit 9 options. Would you suggest I watch your videos? Well, I would prefer people read the book. But I'm an OG guy and I get some people are not. So if you're going to read the book, I think my videos can put a good dent in the reading. So I would either use the videos to confirm the reading, like Dean talks about it, you read about it, that means it's something important.
That's what I've been using. Like my question basically was like, I read the book and now I'm going through all the videos
Yeah.
because I'm very like a visual learner. So I have to see it and then take my
Well,
notes.
the
and, like,
videos, I don't want to say derogatory things about the Kaplan people. They asked me to make the videos. I go, well, why would I do that? I got a YouTube channel. Are you guys nuts? Why would I make Kaplan videos when, that all that to say, I don't think watching my videos instead would hurt you. I mean, I'm pretty sure I don't do anything radically different than Kaplan does it.
So
Right.
which one for the options for Unit 9, you would recommend me watching all the option series?
No, now I got 155 videos. No, the first four, if you go to the playlist, it says you must
Okay.
watch the first four.
Okay.
One of one, one of four, two of four, three of four, and four of four. I start with the basics. That's about 4 hours. It's
Mhm.
what you would get if you join me for class. It's the
Okay.
introduction, basic option strategy is video number 2.
Okay.
Hedges is video number 3, stock
Okay.
plus options, and then advanced option strategies. All right, this is our last one, and then I'll answer. Well, Eric, any tricky concepts in Unit 8 through 14? What kind of question is that? No, that's not what we use these for. Pick out some particular questions. Put another one of these up and we'll do it. All right, let's see. Let me go get the Kaplan Q Bank again. This is our last one. And this is 154 5603. Oh, this drives me nuts. It drives me nuts because every test prep vendor drives me nuts. Covered is not a concept about a strategy. Covered is a margin concept about whether I'm going to ask you to deposit money or not. And so I hate this question because you're getting the income, but you still have unlimited risk. So covered put writing is a strategy. Covered means as a margin clerk, I'm not going to ask you to deposit money to write a put on stock that you've sold short. You're still going to have to pay me the 50% on that. So this is just a poor question. Let's see what Bill says about that. Oh my God. That's another sign it's a poor question. Well, 1, 2, 4 paragraphs on that question. The question on the actual exam is to recognize that if you are short the stock and write a put, you still have unlimited risk. Now, you can hear me read by putting covered put into my channel search bar, and you can listen to me 30 minutes ranting on how much I hate test prep vendors who don't understand the concept of the margin here, right? Obligation. Yeah, wouldn't worry about that at all. There's no strategy called covered put writing. Is it an effective hedge? The answer is no. It's an ineffective hedge. It's a partial hedge. You're still subject to unlimited risk. Yeah, I think it's a poor question, as I said. All right, last call. I said that would be the last one. I'll give you one more if you got one. All right, I'll put another one up on the channel. And I cap it. So if you don't see it, that means it's booked and then it falls off the thing where, because I don't want to have like 50 people, these things, it would become a mess. But look for the next one. I'll probably get it up today or tomorrow at some point. We do remember Charlotte is somebody who is paid for tutoring. So she has access to free office hours. Eric, you're a Kaplan student of mine and you have access to that too. And you can find that on the Glass Cab and that's free. I'm not sure, Elvia, if you've join me for a class or a tutoring session. But if you have, then you're welcome to join those office hours as well. I know Charlotte is eligible. I know Eric is eligible as well. Andre, I'm not sure if you're eligible or not. I'm not too loose. It's not like I'm going to check your ID before you join the paid office hour, but it's supposed to be for paid students.
But like honestly, like you're amazing. I'm sorry, I have to say it again, but like I was literally hearing your voice the whole test, and it was so
Oh,
easy.
man, somebody, I've never been called this before in my life. Somebody, maybe it was you, somebody left on social media, Dean, I heard your voice like an angel. I said, man, I have been called a lot of things, but I have never been called an angel. I thought, wow, that's a first. Yeah. I told my mom, I said, you'd be proud. Your son's an angel. I earned my wings. Woo-hoo! All right, everybody. Share the URL, Eric. You just go to the class tab. It'll be there. If you don't see it on the class tab, that means I haven't put it up there yet. So I don't know that there's a URL. Same way you book this, Eric. You go to the class tab and you just go scroll down and you see free office hours for paid students. And it's that easy. ADV part 2 question. What's your question, Andre?
So it's a little long, so I didn't type it. If an on the exam it asks if an IA did not use the ADV part 2 and used their own brochure, but in their brochure it was only for 2 years versus the 5 years. It was asking what is it in violation or not?
No, you just need to make sure that whatever would have been found in the Form ADV Part 2 is found in your brochure. All right. And then you'd have to make sure that if you're using it for 2 years, you could always have a rule that's more stringent. The idea would be you're gonna get a new one to do. Right. So
Oh,
2 is better than 5, actually, assuming you make a new one, right? So
gotcha.
you could always have to do something more stringent than what the rule is. You just can't do anything more lenient. Right. So if it said like 7 years, then that would be a problem.
Gotcha.
Okay. All right, everybody. Remember, inch by inch, your exam's a cinch. Yard by yard, your exam is hard. Can you see my my ticker? I got Brian's permission to add his little thing. My little thing is inch by inch, your exam's a cinch. Yard by yard, your exam is hard. And Brian's is you take the test. Don't let the test take you. And yeah, I said, hey, can I put that on my ticker? And he said, yeah. So now we got that on the ticker going too. All right, everybody. I'll see you next time for either the office hour, Eric. Send me an email if you like. If you can't find it, I'll send you a link when it's available. But you should be able to find it on the class tab. And I'll put up another jam session. I'm trying to cut back on tutoring and do more kind of stuff like this. Rather than tutoring 8 9 hours a day. That's kind of not becoming fun as much as I'd like it to be. So anyway, so just keep a look on it. Most of the thing on the booking page is not free. Everything on the channel is free. Tuesday nights are free. We do that live stream Q&A. That's free. So there's some free things, but you got to hunt for the free things. They're harder to find than the paid activities. Those are
Yeah, Dean, where is like, how do we find out like when, like the link for Tuesday nights?
Oh, it's right on the YouTube page on the homepage.
Okay, it's
Live.
just, okay, great. So it's just Tuesday night. It's what, East Coast time, do what, 8 p.m.?
We do, well, 5 p.m. Arizona time. So whatever time that is for you on the East Coast.
Okay, great.
Yeah, every Tuesday, 5 p.m. Now, we don't have a whiteboard. Brian has his little old-fashioned whiteboard, but like that combination thing, we couldn't do that in the live stream on a Tuesday night. So, the QIDs, I think, lend themselves more to this format. That if you give me a QID on Tuesday night, I'm not going to be able to bring it up. I could try. I probably should try to learn how to do that, but I'm always afraid I'm going to accidentally kill my live stream if I start going hunting for the Kaplan Q bank or something, or Charlotte. I don't have anything untoward on my computer screen, but I'm always afraid if I go hunting for something, maybe I open up the wrong link or something. So this is a better format for like QIDs, but we certainly could have answered the question about a combination there as well. All right, everybody, off to the dump I go, and I'll see you next time for either the jam session or the paid office hours, free office hours for paid students, or the live stream Q&A. There you go. Thank you so much. That's the booking page, Eric. There you go.
Thank
So
you.
that'll take you to the class tab, and there should be something up. If there's not, it'll be up shortly today or tomorrow. Okay, bye-bye.
Thanks, Dean. Have a great weekend.